Good morning. It's Thursday, January 23rd, about 6 a.m. Central Time. Over at the precious metals, they are edging lower after futures enter a consolidation phase and await additional data and further news on President Trump's plans for sweeping tariffs. I just saw coming across the terminal here that we are expecting to see Donald Trump come out and address the nation here at about 10 a.m. Central Time from Davos. So looking at the overnight price action in precious metals and industrial metals and your setup for the day, gold is pulling back here down about $12 at $27.58 for the February contract. If you are going to enter that market, be sure to look forward out to the April contract as February is set to expire. So we do have that February contract, $27.58, down $12 right now, high $27.66, low $27.47. Excuse me. We are in a tight consolidation phase. As like I said, we're about $40 short of its all-time high, and we are still set for its fourth straight weekly gain. So the president has identified China, the European Union, Canada, and Mexico as potential targets for tariffs. Now, traders are really focused on the wider implications of Trump's domestic policies. That's that pledge to cut taxes and also to curb immigration. So economists are believing that those potential moves could really weigh in on growth and then reignite inflation. So when you have declining growth and you've got rising inflation, the current environment is stagflation. And I believe that traders are preparing for that. And that's why you've seen gold futures marching up. And that's the reason why gold futures are outperforming silver at the moment. So if you get to silver futures down about 38 cents here at $31.04. Now, a prolonged tariff conflict, it's going to slow that global growth. It's going to pile more pressure in on the Chinese economy, and it should hurt those industrial metals. So when you look at the gold silver ratio edging back higher to about 89-1. So you got gold outperforming silver at the moment. Now you check on your industrial metals, you've got copper futures down about 240 right now at 427.65. We're down about 0.5% in a fairly tight trading range. You're also seeing aluminum, zinc, as well as platinum and palladium all coming off of the recent rally that we've seen. So we shift to some of the top overnight commodity trading news. We turn our attention to the energy markets because energy is the only sector that is green on the screen at the moment. You have natural gas futures advancing as long-term weather forecasts have really shifted to significantly colder. I mean, I almost slipped down the stairs coming here. So all the melting snow has now turned to sheets of ice at the moment here. So we saw February natural gas up about 5% yesterday, and it's extending its gains here today, up about 1.24%. You do have crude oil futures after that brief sell-off starting to turn back up as well. So it's steady here. We did see the API report come out here yesterday. It showed crude oil had its first build here in several weeks here, up 1 million barrels. We also saw gasoline up 500,000 and distillates up 3.2. We will have the EIA data coming out here later today. Many of you do trade the energy markets here. So natural gas expecting another drawdown about 270 billion cubic feet. And then on crude oil inventories expecting a drawdown of 100,000 barrels. Now you return to the equity markets and you look at equities in the general market. It is taking a breather here today, and this comes after U.S. equity futures dip. We saw the S&P 500, the cash index, reach about an all-time high yesterday. So just coming off a touch here, 61.10 on the S&P, down 10.25. If you do watch CNBC, my partner Bill Baruch, he'll be on the halftime show at 11 a.m. Central Time for the full hour block, talking about some of the moves that we make on the wealth management side. If you're interested in that type of account, reach out to info at Blue Line Futures. We can get you set up with a consultation with our VP of Client Strategy. Now, looking at the dollar index, it is edging higher. We are seeing some of the foreign currencies, everything from the Australian dollar, British pound, euro currency, Japanese yen, all making new lows on the session here. And then that's also weighing in on treasury yields. You're seeing yields start to creep back higher, and you're seeing 10-year treasury futures coming off of some of its best levels. Bitcoin and Ethereum are taking a breather. I believe it's more of a wait and see on those particular asset classes on how things develop with these strategic Bitcoin reserves. We're seeing many different states out there propose it and passing those measures. Now, getting into the performance leaders, excuse me, your one-day performance, you are seeing silver, about the worst performing commodity, down about 1.1%. And then you also have copper down about 0.5%, the NASDAQ as well down 0.5%. You get to your best performing commodities, it's natural gas, coffee, feeder cattle, and sugar. Sugar has been beaten up really bad here, and it could be trying to search for a bottom. You go year-to-date performance leaders, well, you got natural gas as your best performer, up 10%, palladium up 10%, soybean oil, and then you start getting down to some of the metals. Silver is up 6% on the year, so potentially some of this sell-off that we're seeing here is that traders are booking some of those profits after an early rise on the start of the year. Now, the CME Fed Watch tool, again, no real adjustments here on the expectations for any interest rate cut anytime soon. Now, you look at the current trends on these metals here. So copper, gold, platinum are all been in bullish trends. Silver futures not really getting that breakout to the upside. Your critical level of support here on the silver market sits right at about here. This 50-day moving average, 30.96, I believe, is more of a pivot point right on either side of $31. We get a break below $31, chances are we're going to come back down and retest into those the low 30s. We need that extension upwards through 31.90 in order to break out and I believe retest things like 32.50 and beyond. You look at the gold market, kind of drifting in a small consolidation pattern again near those 11-week highs. You have stochastics in overbought territory. The MACD is positive here. I believe your kind of critical level of support, not necessarily critical, more of a pivot, going to be about 27.50. You break below there, it's going to be pocket support, 27.18 to 15. You'll see that was one of the lows from back that washout we saw 3 sessions ago. And then below that would be 2,700. And then finally the 50-day moving average. I'll be on the Worldwide Exchange here on CNBC tomorrow morning. And then following that, I'll be on the Schwab Network later in the afternoon. You got any questions on futures options trading? If you want to open up an account, it only takes about 10 minutes. You could do so online. Just give us a call or shoot us an email at info@BlueLineFutures. And remember that futures and option trading does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.